All right, everyone. Just want to do a lesson here on the account growth sheet. All right, guys. On this account growth sheet, so this is in the folder, and you guys can, like I say, adjust these numbers as you want. You can figure out what the formulas are for each of these sheets that I have set up in here. But basically, just to go over what's on here, basing this off of each month. Okay, you see a list of the 12 months here, and we could see our amount per month. And then for this spreadsheet, I used 1% risk. Okay, so if we start out, each month you're going to see this number is the start of that month. Okay, so if we make 5R per month at 1% risk per trade, at the end of January, beginning of February 1st, 1% risk grows to 5250. And then we can see by the end of the year, that account that started out January 1st at 5,000 grew to 89.79. And this is the ROI at 1% risk. And then you go down the line, 10R, 15R, 20R, 25R per month. And we can see what these values change to based on that. Okay, so that's based on 1% risk per trade. Okay, then we move down, next chart, based on 2% risk per trade. And obviously, these numbers can get pretty large pretty quick. Okay, makes sense? So again, you can go in here, you can change these values and basically enter whatever you want. You can figure out what R amounts you want to put in based on your style of trading, and you can figure it out from there. Okay, this is just kind of a starting framework for you guys, but print this off. Yeah, for sure. But print this off. Make sure you're looking at this so that you can grasp the concept here of the account growth. Finally, in the bottom part, what I did was a full run of 5R per month for 5 years. This is at 1% risk, 2% risk, and then 2% risk with adding, say you could add, $100 per month, what that would grow into after 5 years. So we go month by month all the way down to 60 months, 5 years, and 1% risk. At the end of 5 years, $5,000 grew to $93,395. 2% risk grew to 1.5 million, and 2% risk with that added monthly made you an extra 300 grand. Okay? So that's an overview of that sheet. Like I say, 1% risk versus 2% risk. You can see it's a huge difference in here. when you compound it out. Yeah, it's a huge difference. You know, if you were just sitting here thinking about it, you would say, well, you know, maybe it's 3 times as much or 4 times as much, but when you compound it out, it makes a huge difference over time. And you can see that in the formulas. So like I say, make sure you're using this sheet. Okay? Any questions on that, guys? All right. Okay, let's move on. Yeah, yeah. That's the question to ask yourself based on. Then you're looking at the numbers and you're saying, well, how do I get to that point, right? If I'm only able to take a couple trades a week, that's why I say everybody should be starting with the 5R per month as a goal, right? Because we know some of these trades, you know, if we can trail them out, we really shouldn't have any issue making 5R per month, right? Even with a limited amount of time, if we're just swing trading, right, off of daily and 4-hour charts. In order to get into some of the higher R amounts, you're going to have to take, you know, you're probably going to have to take some day trades as well. But, you know, then when you get into intraday trading, you know, you'll find that it's not going to take that many trades. It's just finding the right trades. And we're going to talk about the intraday stuff a little bit as well in a little bit here. Okay, so let's get into that. Let's look at what we a little bit about what we talked about last week. What we were going over last week was intraday reversal times and daily open lines. Daily open lines I plot on my charts. I adjust that line every day based on 5 p.m. Eastern Standard Time close. That's the when the previous day's bar closes, current day bar opens, and what you'll find is a lot of times either during Asia session usually or during the Europe session, you'll see pullbacks to daily open lines, and you'll see a reaction in that area. And I believe why that is because, you know, bigger market participants, bigger traders, banks, they're trading in the direction off those higher time frames. And when they see pullbacks to that daily open line, as long as it's still above the daily open and it's in the direction of the higher time frames, I believe they've got orders already set in those areas to be either buyers or sellers based on that trade direction of the higher time frames. Okay. Okay. And then also what we needed to go over here was the reversal times. So key reversal times for me are going to be, and this is all Eastern Standard Time, 2 a.m., 3 a.m., which is the start of the Europe market sessions. And then going into the U.S. session, obviously U.S. markets open at 9:30 a.m. Eastern Standard Time. And then we stick with, or I do personally, I've seen a lot of reactions both, I know stock traders watch reversal times 10 a.m. and 10:30 a.m. And that's kind of what I wanted to go over here, so we can see basically what happened here. We had this pullback here on the Aussie USD. We saw the buy setup fail here. We go down to the 15-minute chart here, and we see 16:45, 9:45 Eastern time is what this is. This is the buy setup that failed on the hourly here. And then what happened, we see a wide range bar up, topping tails that break over the high of that failure area, and then it reverses at that key reversal time, the 10 a.m. key reversal time. Okay? Moving on to the crude oil. Again, we talked about this last week, but I wanted to go over it because it was in the section of charts. We talked about that trend channel, got down to the bottom of the channel. We saw a nice base form here, broke down hard into the bottom of that trend channel, and then we see on the 15-minute a nice double bottom gets set. The start of the move here didn't take off, didn't take off until after 11 a.m., but we can see when the bottom was set. The bottom was set at that 10 a.m., 10:30 a.m. reversal time. Nice drop, popped up, retested it, took it out by a couple cents, and then moved higher from there. And we see where we're at this point. You know, we're well above this area. So again, watching exactly what I'm referring to here. Watch for these key reversal times intraday for intraday trading here. Okay, got one more chart here, and this was on the dollar CAD. We saw this this strong move up on the 4-hour. We saw a double top form at the 200 period moving average on the 4-hour. We saw this nice pullback to the 50% retracement area on the 4-hour. We see this is where that pulled back to on the hourly. Wide range bar down, continuation, nope. Stopped at the 50% line, strong move higher. Next pullback, we go down to the 15-minute chart. This is that bottom that was set on the 50% retracement on the 4-hour. This is the move higher, and then we see bottoming tails form, double top, double bottom at, again, we can see the line here. The tails were forming at 16:45, which is 9:45 Eastern time, and then that reversal, that double bottom was set at the 10:30 reversal time. Move up, went sideways, which means buyers are holding price here, looking for prices to move higher, and we saw a nice move off that 50% 618 pullback area. Yeah, they on all of my charts, I always label everything the same. The moving averages are the same. The red is the 200 period. The blue is the 10 period, and the green is the 20 period. All simple moving averages. Okay. Just reference points because I know other traders are looking at them, and we're looking for confluence of confluence areas, so we can get as many traders involved in these areas that we're looking at for prices to reverse, right? Okay. All right, let's move on here. You guys got any questions on intraday before I move on? Real quick. Any other questions on intraday? It is, and what I was saying, yeah. So I mean, you have to. It takes an incredible amount of focus, especially when you're looking at even 10 different pairs. You know, so you just can't be doing other stuff while you're trying to trade like this. There's too much information jammed in all these charts. You won't be able to focus. You're going to be missing stuff, and then when you get bored, you're going to be jumping around. Yeah, yeah, yeah. You know how it is, Jack. It's the same thing. Same thing in FX. Same thing in any trading instrument, right? You can only take so much, but what I wanted to point out here is, you know, when the odds are in your favor, if it gets down to key areas at these reversal times, 50% pullbacks at reversal times, odds are we're going to see some type of reversal pattern. Let's wait and see if that reversal pattern forms, right? But yeah, it takes a lot of focus and a lot of practice to get to where you're not trying to do other stuff and just getting sidetracked. Because the minute you see this move higher and you're like, I'm going to wait for the pullback, and then you start doing something else, or you start watching another pair, and then you miss that pullback there, and then you just miss the whole move. You see it go higher and you're like, well, I didn't catch the bottom, I'll just wait for the next pullback, and then it never pulls back again. Just goes sideways and just grinds higher. Okay? So a lot of it is you know, understanding how much you can actually be available to focus. Yeah, I would stick to not trading past lunchtime, you know, Eastern time, unless there's something that's, you know, dead quiet, and you know, it's like some news announcement, you know, the Fed's coming out at 2 p.m. and your plan is that you're going to trade news announcement on Fed day, and the market's just been dead quiet all morning, haven't seen any moves, which is pretty rare. I would just stick to trying to trade the Europe and morning US session. And that's kind of what I'm pointing out here. If you guys go through your charts, go back, take a look, you're going to see a lot of reversals happen during these times. The 2 a.m., 3 a.m. time period at the start of the Europe session, and then kind of that start of the US session following the reversal times in the stock markets as well. Does that make sense? It can at times, yeah, but it can be a little bit tricky because, you know, you can get some fake outs, and that's why I've pointed out in the past, yeah, 2 a.m. Eastern Standard Time, Gregory, 2 a.m. And then what you can see sometimes is sometimes a move will start at 2 a.m. and then you might see a reversal at 3 a.m. Or you could see, you know, where it can like it'll move up. You know, you'll see a move higher, start at 2 a.m. and then 3 a.m. it just consolidates for 15 to 30 minutes, and then you see the next leg higher, something like that. Or you could see where the move started in the Asia session, and then all of a sudden you see 2 a.m. it pulls back, 3 a.m. you get kind of a breakout failure, double top kind of setup, and then that could be your. Okay, I'll check it out. So again, the yeah, I see what you're saying there. Yeah. So again, going back to reversal times and just as a tool to help you, you still gotta know what's going on these higher time frames. But when the higher time frames pull back, align intraday, and then you see it happen in these reversal times, they can be nice intraday setups for you. Okay. Intraday trades and the intraday trends, yes, and intraday trends can turn into daily trends, like we were just talking about happened with the U.S. oil, that U.S. oil trade. 4-hour trend channel, that intraday low, set the low for what looks like it's going to be the low for, could be the next month on oil, because oil looks like it's heading higher, right? But again, even if you can only look at daily 4-hour charts, who's to say that you weren't watching? We talked about this. Look at the 4-hour, 1-hour chart pattern here. We could see the same thing on this 4-hour chart we can on the hourly. There's just more information here, more bars. We can see consolidation sideways, breakdown, failure, full reversal right back up. What's to say that when you see that reversal happen, because you know this is a tail that's starting to form on the daily chart, what's to say that you don't take an entry over the high of that bar with a stop at the low, at least initial position, and then possibly add to it from there, right? I know Anmol's kind of gone over this stuff with you guys on the when he's talking about these trend channels, right? So it's the same kind of thing I'm talking about here. Okay, so we're all kind of looking at similar stuff, just might be talking about it in a different way, right? Yeah, it does. It does. That's one of the things. You just it's open all the time. So you just got to pick your time and say, this is my time that I can have full focus, and either something's setting up or it's not, and that's just the way it is, right? Definitely never going to catch every trade, so it's it's tough realization, but we gotta understand that we're Just not going to catch every trade out there. We're going to miss some. But that's okay, because there's a lot of them. There's always something setting up. It's one of the notes I have. You know, I come up with different different phrases and stuff, and one of them is there's always a trade setting up somewhere. So just got to realize that, and just if you miss the last one, you wait for the next setup, right? Okay, I think we're good on this section here. Let's see what else. Okay, the other thing I wanted to go over here was, and this is another screenshot that is in the folder, and this kind of gets into the pattern inside of patterns, which is a document that I also wanted to look at with you guys in a minute here. So we look at this. This is obviously on a daily chart, and I've got some stuff labeled here. So this happened in December, and not a pair that I trade. It's not on my list, but it was a pair that was talked about in the room, and so I just had it on the watch list just to see what it would do. And we see what happened here. Got this labeled descending wedge pattern forming. Okay, we can see a clear line of support. Tested it, tested, breaks through, comes back up, retests it with a topping tail, breaks through, comes back up, retests it with a topping tail, comes back up, breaks over the high of the topping tail one more time, tests that support, which is now resistance, along with, we got the red 200 period moving average, 20 period moving average, all in the same area. And then we go down to, we're going to look at here in a second, the breakout failure into this area on that 4-hour chart. Okay, wide range bar starts to break through support here. Multiple tests of minor resistance. Oops, about that. All right, here's what that 4-hour looked like at that time. This was that strong move up, that first test. This is the same line in the area of the 85 whole number. 4-hour chart, pullback, wide range bar igniting. This is our trend line on the 4-hour chart, and we get back up, watch out over the pivot high, also in that whole number area. Also going back to the daily, in that minor resistance area was major support, became minor resistance when it comes back up to test the bottom of that area. So what did we see? Wide range bar igniting on the pullback down here. Possible wide range bar ending at the high. We see the pullback to the 20 MA and buy setup fails. Try to pull up again, and at this point we're in little downtrend channel, and we see with the failures we've got going on in here, once it got below the lows here, totally fell apart. Okay, so I just wanted to go over that real quick again. You guys can look at it. It's in the folder. I'd say, you know, if you like this pattern, definitely put it in your toolkit. Have it sitting alongside your trading station so you can look at it and ingrain this in your mind for patterns you want to look for. Okay. Any questions on that? Okay. All right, and then moving on here. Let's see. Okay, so just to, what else have I got here? Okay, this is the last thing I wanted to go over. Okay, and just to kind of combine that, similar to what we were just discussing, patterns inside of patterns. This is that sketch that's in the folder as well. We went over this a little bit last week, but number one, that breakdown failure, similar to what we just looked at on that U.S. oil trade intraday, right? Break base at the lows, breakdown failure. This setup here, we get a nice pullback, and then we look at, let's look at number one here and how that combines with this. This is the other sketch that I have in the folder there that goes with the sample trading plan in the folder too. And this is your weekly time frame. So basically in that sample trading plan, I've got weekly time frame, pullback to a minor support area. We see the pullback here, rising 20-period moving average, the daily setting a double bottom at that minor support area, and looking for the hourly for the basically the inverted head and shoulder pattern to start forming, and looking to get in on that first higher low pullback. Try to get in on the first sign of the trend change on that lower time frame. Okay? So I just wanted to kind of combine that. So we've got actually number two here is what we're looking for on the hourly. Number two is the inverted head and shoulder pattern. Number three was the V bottom, which you don't really see that often, and if you do, it's just, it can be pretty tough to try to trade V bottoms, as you guys know already. Number four, we see quite often the double bottom. Number five, the is the ascending wedge pattern at a low major support area. And then number six is where it just chops around, puts in a base, and then we see a break above the base and a pullback to the top of the base for the first higher low, and then we see the trend change that way. Okay, so these are patterns inside of patterns. Okay, it kind of breaks it down from higher time frame to the lower time frames, and then we see how these trends change with these patterns. Okay, and this is, I know I've got these all drawn as buys or bottoms here, but same thing happens in reverse for the short side. Okay, any questions with anything on that? Yes, that's exactly what I'm saying. Yep. Yep. So when you decide what time frames you want to trade, you're looking through your pairs. You're going to see multiple setups happen on different time frames. Okay. You go through your charts. Just go through and select. You know, just do either weekly, daily, 4-hour, or daily, 4-hour, hourly. You're going to see exactly what I've got drawn here at times. You're going to see this exact thing form. So the key is to figure out what you can identify. Yeah. Yeah, you can definitely use the 15-minute. Just as long as you can okay. Yeah, if you can come up with a system that way that works with your personality and your trading style. This is there's so many different ways to do this, guys. So many different ways. So hopefully that helps. I think that's it for this evening. Gosh, we did the lesson was longer than the market preview, but important information, right? I think you guys can realize that.